Hello everyone. Welcome back to our channel, where we dive deep into various topics. Today, we have an exciting subject to explore, the Indian stock market. We'll cover its history, key regulatory bodies like SEBI, the major stock exchanges NSE and BSE, the role of brokers, the number of listed companies, and the different types of exchanges available for trading. So, let's get started.
The roots of the Indian stock market can be traced back to the 19th century during the British colonial era. In 1850, the Bombay Stock Exchange, BSE, was established as the first stock exchange in India. Initially, it operated under a banyan tree in Mumbai before moving to its current location. In 1875, the Ahmedabad Stock Exchange was founded, followed by the Calcutta Stock Exchange in 1908. Initially, it served as a platform for trading cotton and other commodities. Over time, it evolved into a full-fledged stock exchange.
SEBI Securities and Exchange Board of India, established in 1988, plays a crucial role in maintaining market integrity and investor confidence. One of SEBI's key responsibilities is to monitor and regulate capital market intermediaries. It issues licenses and regulates the activities of brokers, depository participants, portfolio managers, and investment advisors to ensure compliance with market norms. In recent years, SEBI has introduced several reforms and initiatives to enhance market efficiency and investor protection.
The 20th century brought about further developments. In 1956, the Government of India nationalized the BSE, leading to the establishment of regional stock exchanges across the country. This expansion allowed more companies to access the capital market. In 1992, a significant reform took place with the introduction of economic liberalization policies. The stock market witnessed the establishment of the National Stock Exchange, NSE, which revolutionized trading with its electronic platform and introduced the concept of screen-based trading.
In the Indian stock market, brokers act as intermediaries between investors and the stock exchanges. They provide a platform for buying and selling stocks, ensuring smooth and secure transactions. One of the primary roles of brokers is to execute trades on behalf of their clients. Brokers offer trading accounts and trading terminals to investors, enabling them to access real-time market data, place orders, and monitor their investments. These platforms are equipped with tools and charts to help investors make informed decisions. Additionally, brokers provide research reports, market analysis, and expert advice to assist investors in making sound investment choices. They keep their clients informed about market trends, company performance, and other relevant information. Brokers also facilitate initial public offerings, IPOs, by helping investors apply for shares and allocating them accordingly. They handle all the paperwork and ensure compliance with regulatory requirements. With the advent of online trading, brokers have embraced technology, offering online platforms and mobile apps for convenient trading. Investors can now access their accounts and trade from anywhere, anytime. Brokers play a vital role in the Indian stock market ecosystem. They act as intermediaries, providing trading platforms, research, and expert advice to investors. They facilitate transactions, educate clients, and keep them updated on market developments. In the Indian stock market, there are different types of brokers catering to various investor needs. Full-service brokers offer a wide range of services, including research, advisory, and wealth management. On the other hand, discount brokers provide a no-frills, low-cost trading experience with minimal research and advisory support. Additionally, there are online brokers who offer trading platforms accessible through computers and smartphones. These platforms provide real-time market data, advanced charting tools, and seamless trading capabilities, empowering investors to make quick decisions.
The Indian stock market offers various avenues for investors to trade and invest in securities. Understanding the distinct offerings of these exchanges is essential for investors seeking to diversify their portfolios. The first type of exchange is the National Stock Exchange, NSE, which is the largest stock exchange in India. It provides a platform for trading equities, derivatives, and exchange-traded funds (ETFs). The second type is the Bombay Stock Exchange, BSE, the oldest stock exchange in Asia. It offers a wide range of investment options, including equities, debt instruments, mutual funds, and derivatives. The Multi-Commodity Exchange, MCX, is the third type of exchange. It specializes in facilitating trading of commodities such as gold, silver, crude oil, and agricultural products. Next, we have the National Commodity and Derivatives Exchange, NCDEX, which focuses primarily on agricultural commodities like wheat, rice, cotton, and spices. The Indian Energy Exchange, IEX, is the fifth type of exchange, specializing in the trading of electricity and renewable energy certificates, RECs. Last but not least, we have the Metropolitan Stock Exchange, MSE, which is another stock exchange that facilitates trading in equities, bonds, and derivatives.
Remember, investing in the stock market requires thorough research, understanding of market dynamics, and careful decision-making. Always consult with a financial advisor before making any investment decisions. Thank you for joining us today, and don't forget to like, share, and subscribe for more informative content. Happy learning!